We should talk about commodities, but let's go talk about oil specifically right now. When you think about where we are, and I know we've been waiting for the past week or two now about what would happen here. When you think about the worst case scenario, just so we really understand the risk at play here, what does that look like?
I mean, the worst case scenario is that Russia seeks to weaponize, I would say, not only their oil exports, but all of their commodity exports. I mean, Russia is the largest exporter of wheat. Ukraine accounts for 20% of global corn exports. They are the major supplier of natural gas into Europe. So the broad concern is that if Russia is hit and will be hit with very, very tough economic sanctions, that Russia responds by playing the commodity export card.
And how do you handicap that possibility?
I mean, market participants have been saying that Russia wouldn't dare risk its reputation as a stable supplier. But given that they have plunged Europe into the gravest security crisis since the Second World War, I just don't think we should be sanguine that they won't look to inflict major economic pain on Western consumers in the hopes of changing calculations about the willingness of Western leaders to defend Ukraine.
When you look at the price of oil this morning, does that make sense to you? Do you think it should be more expensive, less expensive?
I mean, that makes sense given that we have the commencement of an actual full-scale invasion. I think what the market will be looking for now is actual signs of physical disruption. I mean, one thing that is concerning is that when we've had supply disruptions before, we've been able to call on producers with spare capacity to help fill the gap, to help tame prices. Right now, we have very thin spare capacity shock absorbers in the oil market. Saudi Arabia and the OPEC countries with spare capacity have indicated that they're not at the moment willing to put additional barrels on this market. And so the White House does not have that many cards to play. We expect them to go for an SPR release, one that will be coordinated with the IEA. But again, typically, Washington can make a call to Riyadh and ask for more barrels. Right now, it's not clear that call would be answered.
And you just talked about the Biden administration and tapping that strategic petroleum reserve. You think that we don't have enough? Is that what you're trying to say?
I mean, the issue is I think they can do a large coordinated release. But the problem is, given the magnitude of Russia's oil exports, if Russia were to start curtailing supply, that is a very, very serious hole that would have to be filled. Again, no indications yet that Russia is going to restrict exports. But if they were to go down that path, it is hard to make up for a Russian pullback in commodity exports. Again, I've said this before, they're not a gas station, they're a commodity superstore, and they have the ability to really push up inflationary pressure.